not worried about moving over every line item. So we're not moving purchases of material and direct labor. We're just moving their total of the cost of goods sold. Okay, because the purpose of this is to give them a summary, not to give them every piece of detail. So that's why we're only moving this figure. You'll see we're only going to move our operating expense figure, and then our other figure. We're taking the totals from here. Now this line that says other income / expense, you do need to put a negative sign because it might be income and it might be expense. The other lines, if it's only an expense or only income, it clearly knows if they're positive or negative. Okay, so then we move over our 2010 information. Cost of sales or operating expenses. And under other income again, we have to put negative $139,000. And we're double checking to make sure that our totals, match the totals. If the numbers don't match, we put something wrong in there. So we moved on to the next page in the financials of the cash flow statement. And on our spreadsheet, we moved down below the income statement portion to this cash flow portion. Okay. This portion on the spreadsheet has everything filled in because it pulls the numbers from up above, except for that one line, depreciation and amortization. And I should have mentioned this at the beginning, but you'll notice at the very top of our spreadsheet it says, do not change items in this red color. Essentially, the way this is formatted is that everything that's in this red color is a formula that's automatically calculated for you. Everything that you need to input is in black. Okay, so that's on this cash flow. All we're putting in is this one line, and it comes from the cash flow statement on their financials. Okay, so we're looking for this line that says depreciation and amortization. We're taking those figures and putting them into our cash flow statement. All right, so what we just done is we finished with that 2009-2010 financial statement. Real quickly, I'm not going to pause much here, but now we're going to go on to the 2010-2011 financial statement. And we're going to go back to the assets and do the same thing to fill in our third column. Okay, so you've seen all this once before. We just take the assets here, move them over there. So you'll see the cash, the accounts receivable, the inventory are pretty self-explanatory. And our prepaid expenses, we only have, looks like one line this time. Other is this 12,550 up there. Once again, we're taking a total only from our property and equipment to move that over. We put in our intangible, which is goodwill, and we're double checking that our assets totals match. So we scroll down to the liability section to do the same thing. Got our payables in there. Okay, we're taking, again, that short-term debt is the line of credit balance. We're moving down to the bottom portion where it says line of credit. I'm not sure why this slide isn't finished, but you can imagine if we could put the rest of the numbers in there. Alright, so now I missed the end of that balance sheet portion, but now we're just going to do the income statement for 2011. We're going to put in the sales figure. Alright, so we've got our $5.1 million in sales. We've got our cost of sales there at 3.4. Get our operating expense total. Get our other income or expense. Since it is negative, we put the negative in there. double check that our net income figures match. So then we got it all right. Then we're going to look again at the cash flow portion here. We need to find out depreciation from the cash flow statement. Okay, now when you get to internal financial statements, like our interim statement is, or even if all the statements you got were internal statements, you usually have to do a lot more of the legwork to put the numbers into the financial statement, okay? Because, I mean, to put the numbers into the spreadsheet. Because what happens is when you get compiled, reviewed, or audited statements, the accountant has already done this work. He's already taken all this detail that you see on the internal statement. He's already put it into the right format so that we have the format you've just seen to move it onto our spreadsheet. When you're looking at their internal statement or an interim statement like this, you often have to do a lot more legwork of figuring out what numbers are the summaries that you have to put on there. Okay? So we're going to see some of that right now when we look at their March 31st interim statement. On the spreadsheet up there on the left, you see it says, right now it says 6 months of 2012. So one of the things you need to do in your headings at the top is make sure you change that to match whatever period we have. Okay, I think somehow at the beginning I must have skipped it, but at the top of the spreadsheet you'll see for the first 3 years, I think we already have filled in year end 12/31/2009, 2010, 2011. We need to make sure that this matches as well. So we've got our March 31st put in there. Okay, so we see our total cash is here. We have to find that. It wasn't just one line like on the other one. So we put our cash number in there. Accounts receivable, again, they have it broken out. We just take the total. And the employee advances we put under the other current assets. Scroll down a little bit. So inventory, they have a whole bunch of different kinds of inventory broken out. We have to find where the total is. And we put that total in our spreadsheet. And again, prepaid expenses, they have a bunch of them itemized. We just take the total figure there to put that in the spreadsheet. Assets again after the depreciation, that's our net figure, that goes in the spreadsheet. Our intangible goodwill goes on there. And deposits we're putting under other. And we double check that our total assets matches total assets they have, so they have all the right numbers on there.